My name is Kevin. I'm leading the investment activities of Tenity in the Nordics. Tenity is both an accelerator and a VC fund focused on insurtech and finance and fintech. We're backed by big players, UBS, Julius Baer, the Swiss Stock Exchange, et cetera, and we're leveraging those corporate / LPs to help our company and grow our network into building a whole fintech, insurtech ecosystem across the world. So we run 2 programs every year in the Nordics, others in Singapore and in Zurich. We are currently in the middle of our batch 5. The idea is to accelerate companies out of Estonia in partnership with banks, in partnership with Copenhagen FinTech. This webinar is part of our acceleration workshop. We thought about opening it to the public and try to, bring in as much value to the ecosystem as we can by inviting Iryna Krepchuk, investment associate at Trind Ventures. She will tell you more about herself on the objective of leveraging data and information to stimulate investment and external capital injection. She'll tell you more about that. We have about half an hour, 45 minutes of probably a long, interesting monologue from Iryna. I have a chat open for questions. So if you drop them there, we can go over those questions together with Iryna at the end of the presentation and try to have more of a, back and forth Q&A kind of format for the last 15, 20 minutes, if that works out. Yeah, Iryna, I think you can go ahead and introduce yourself.
Yeah, thank you, Kevin. I also double checked, can anyone write something in the chat just to see whether it's working for the...
I will pick somebody random. Lawrence, can you write something on the chat?
Otherwise, indeed, it's going to...
Mark is the first one to write. Cool.
I don't see anything.
Okay. Well, I can see the questions, so I think it's the most important. If you write the questions, I can see them. I have a lot of other people. Chat disabled.
I see.
All right. So Ahmed, maybe you can help us figure out why the chat is disabled and why Marcus could write a question.
Kevin, can you please make Iryna co-host?
I don't know how, but I'll figure it out. Make host. Yes, cool.
Awesome. Well, I think the chat will populate eventually, and we can
figure it out in the meantime anyways.
Yes. All right. Well, my name is Iryna, and I work with Trind Ventures. It's an Estonian 55 million fund, investing mostly in companies with consumer and community component. Today, I guess I was invited to talk a little bit about scalability because we kind of self-proclaimed ourselves as a data-driven investors, and this topic is very important for us. So I would like to maybe share a little bit more on our decision-making process and how we even conceptualize scalability and what we envision companies to actually look. Let me quickly share my screen so you can see as well what's going on.
In the meantime, I get the news that if you are not signed in Zoom, then you cannot write questions. So Ahmed can fix that in the meantime. I have about 50% of the people who have me on WhatsApp. So I guess you can write me on WhatsApp anyways, and we'll figure it out.
Awesome. Kevin, can you double check that my presentation is working?
Yes, all good.
Okay, awesome. All right, so once again, the topic of the discussion today is scalability, how to sell your vision with data. And I guess when I was thinking how to start this presentation, I wanted to maybe spend a couple of minutes to talk through, again, like how actually the whole venture world works. And essentially, when you think about the venture investments, you can draw some kind of parallels with the investments in startups, because in the end of the day, just as you are, we are looking for our investors, and essentially we are committing certain amount of money for the fund, and then we are given a promise to deliver. It's the same as you would be doing like VC funds as well. So contrary to the popular belief, venture game is actually a lot about losing money. And in very few cases, we're actually earning money. And that's important to remember because it essentially affects our decision-making process while we are investing in startups and while we are going through the whole process of selecting the companies that will adopt a part of our portfolio. So if you take, for instance, the fund of our size, we have a 55 million fund. And just for the sake of simplicity, let's imagine that we're going to be doing around 20 investments for the whole like duration of the fund. The reality, according to all the statistics and all the data that exists out there, that around 16 companies out of 20 will essentially fail, or they're not going to bring any kind of money to us. So either they will file for bankruptcy, or they're just like not going to be returning any cash back, or we will be just like at the end of the waterfall. So in the end of the day, like we will not be getting like any returns. Then there are around 3 companies that will return only between 2 to 4 times the initial investments that we've done. And there will be only 1 company that will generate 10 to 100x. And for you to understand why is it important, first of all, if we get the mass, like what is the chances of you actually to get the investment from us? Like it's 5% or even less. So it's already like super rare. And also like for us to identify these companies that will earn the whole fund, we need to ensure that this company is going to be very big. So just for an example, for instance, like if we are owning around 10%, was that like disregarding also like dilutions and so forth, if you're owning around 10% of the company, in order for us to have a company that actually returns the whole fund at the exit, it should be around 500 million in terms of valuation. So you can imagine that 500 million company is quite significant and big. So whenever we are making investment decision, we kind of have to assume that each bet that we are placing should technically be a potential like 500 million company. So in order for us to identify this like 500 million potential bet, we are essentially very simplified way asking ourselves 3 questions. First of all, can this be big enough? Second of all, is there any specific mode or there is any potential mode? A very good example is all the AI companies these days, and obviously the market is very heating up. So we need to kind of figure out like whether in the future the company will be able to defend itself against the competition. And finally, whether you are the right team and the right people to actually deliver on this mission in a sense. And the third question is actually particularly important when you're on the pre-seed stage or even like seed in some cases, because obviously you don't really have like much to show apart from the team. And most of the time we are betting on the team because we know that even if you pivot or even if you like come up with a different idea, if you've made a bet on the team, then we know that you're going to be able to deliver. Obviously today, as we are quite limited on time, let's try to focus on only one of these points, and that's going to be point 1, scalability, or the question, can this be big enough? So when it comes to fundraising, it all starts with a story. So whether we hear about you like from other investors, whether we see you pitching on the stage, or we have an initial meeting with you, obviously it all starts with your ability of actually communicating what you're trying to build, who are your customers, what's your market, your ability to attract the right people to join your company, and so on and so forth. And in here, it's also important to mention that the story should be relevant. So like whenever you're pitching to investors, like the first mistake that we are seeing, that the company is not really aware of the investment thesis of the investor. And that's why sometimes the story is useless if it's not targeted to the right person. So the first step would be to definitely identify who is the right investor to pitch in. And second of all, you have to be able to communicate exactly what you're building. And then if the story is exciting, most of the time we are going through all the decks. And oftentimes, in order to kind of present the opportunity of the company, of the market, we oftentimes see some kind of like hockey sticks like this. And on the first side, it looks super exciting. But then once we start paying a closer attention, we basically see that oftentimes those hockey sticks are not really backed by anything. This is just like a nice visual graphs that shows, like this kind of exponential growth from left to right. And the truth is there are barely any investors out there that will invest on the basis of the pitch deck only. And in fact, for us, it's essentially very important to look for the companies that are using the data, and not only for fundraising purposes, but also to better understand the health of its own company and making the internal data-driven decision. Because otherwise, if you don't have this data that actually supports all this like hockey sticks and so on and so forth, for us it's pretty much, you know, like this nice facade that's being used in Hollywood to kind of represent the house, but in reality, this is not like a house. So essentially, scalability shouldn't only be communicated by words, but the data is a very important factor that you should keep in mind while pitching to investors. And in order for us to understand like what we mean by scalability, for investors, scalability essentially translates in the company's ability to at least double the valuation year after year. And the first kind of like early signs of scalability that we usually identify is via product market fit. And this is once again yet another popular term that's being referred by the startups, because like I think every day we're hearing startups that are claiming that they have product market fit, but then once we start digging a little bit deeper, we realize that maybe the startup is not really sure where they're standing. So let's try to kind of like figure out what we mean by product market fit and like how you can actually better understand where you are located and whether you have one. I've been really trying to avoid like 2x2 metrics, but bear with me, please. I think it's the best way to kind of like visualize it a little bit more. And when we look for product market fit, essentially there are two axes that we take into account. We think about the quality of the market, so to speak, like level of the pain of your audience, and also quality of the product, or basically your ability of actually solving the pain. Obviously, best case scenario, you will be in the upper right corner, meaning that there is a high level of pain in your audience, and also your product is actually like tailored to solve this pain. I would say on average, we don't really see companies in this red zone because they barely survive for the long term. But oftentimes, whenever we're having investment calls, like we are seeing the companies either having a product that doesn't really solve the problem, or they are presenting the solution that doesn't really have the market. So essentially, when you think about the product market fit, you should keep in mind that product market fit is achieved only when you have a great market and you have a great tailored product for it. So how do you identify yourself where you're actually located on the graph and just like being, in a way, honest to yourself? For this, there is only like one thing that you can do is to actually utilize the metrics that basically paints you a clear picture of what your interaction with the customer is. So let's start maybe from the upper part, and let's think from the prism of the market. When you have a high level of the pain in the market, it basically means that you have no issues attracting the customers. So there is a high willingness to pay, and you can easily acquire new customers, either organically or through different kind of like paid options. And there are a different set of metrics, but essentially you should think in terms of the low CAC. There will be a high lifetime value to customer acquisition cost. And I would even argue that like customer acquisition cost is probably the most important metrics that you should look at. So in the end of the day, there is a high conversion. And just to bring you like a small example, before joining Trind, I used to work at a company called Hopin, and we used to build a platform for running virtual events. What's the caveat in here is that it was the end of 2020, and obviously nobody could run physical events, and everybody all of a sudden had a very strong level of pain, and they all needed some kind of like virtual solution where they could go and, you know, like deliver their webinars, presentations, different types of like meetups and so on and so forth. So I don't know exactly what were the exact metrics at the time, but being in sales, I can tell you that we literally were signing off the contracts like within days. So in our side, like when we speak about like, let's say with sales cycles, they were very short compared to an average like B2B SaaS company. So this is a very good indicator, meaning that there is a very strong needs that exist in the market. If the situation is opposite, obviously it makes sense that you are pretty much struggling to attract the customers, and essentially you are spending a lot of money in sales and marketing and trying to attract eventually like new companies, businesses, like whoever is your like target audience. And on top of that, there is a very low willingness to pay. You actually can have like very low, like very long CAC payback, and essentially very low conversion as well, like to the paid customers. In terms of the quality of the product, once the product is of a bad quality, what does it translate into? There is like a high churn, there is a low satisfaction rate, like in terms of the NRR and NPS. And then you can also be not empowered to actually bargain on the prior price, because the customers are not really interested in buying the product. And the very easy way of kind of like testing it in your head is just try to think, for instance, like when was the last time that you downloaded some kind of like app, or you tried like a service online, and let's say onboarding was very confusing, or like UI UX didn't really satisfy your needs, or like pretty much, like there were like bugs on top of each other and so on and so forth. So what happens is you usually just open it or download it, and then you never use it again. And that product essentially means like low satisfaction, low engagement, and very high churn rate. And finally, when the product is actually good, well, it's pretty straightforward. You know it right away. And once people start to use it, then they usually stick to it. And that also results in high net revenue retention, high NPS scores. You can see in the engagement metrics that spending like a lot of time on the platform, like some of the examples, for instance, of the consumer apps that we see in that people are spending, let's say, like 40 minutes, 1 hour on the platform, or they are like coming back to the platform like every single day. So all those things are kind of indicators that you are on the right track in terms of the product. So just to summarize a little bit more, you want to be in this upper right corner when there is a product market fit. And essentially there are like a bunch of metric benchmarks available out there. And depending on what kind of business you're building, you can also figure out what's the most relevant for you. I would say like from the consumer side, definitely like we are looking at somewhat like lower metrics in terms of customer acquisition. Then for the LTV to CAC, I would say on average, we are aiming between 3.5 to 5. Ever since it's lower than that, we are just, it's kind of like an indicator for us that you're not probably using the marketing channels and sales channels in the most efficient way possible. And ever since it's higher than that, indicates that you don't really spend enough money to acquire the customers. In terms of CAC payback, at least in our fund, we prefer months, 2 months maximum, but I know that it obviously depends like on the business you're building, and also depends on the fund itself. Like everybody has different preferences, and it can go up to a year. And in terms of conversion, it just depends like what kind of conversion we are talking about. Same in terms of churn, like you prefer that you don't end up in the situation that after a year, you don't have any users that you acquired in your platform. So for instance, when we are looking at different cohort analysis, we are actually paying attention to the 13 months just to see like what's the growth, what's the drop in there. If you are talking, for instance, about the annual contracts and so forth. And in terms of the engagement, once again, it just depends like on the type of the service, but you can easily do research. There are a lot of kind of resources available out there that will help you identify what is the right metrics that you should kind of benchmark yourself against. So the next thing, coming back to fundraising, to ensure that you support your story with data, you have to be ready to actually present this data. I think oftentimes what we're seeing is that we start communication with the companies, and whenever we are asking like to send some kind of materials are not ready. In here, the problem is that you're playing against the time, and obviously it's the same as customer acquisition in a way. Like if you're having the initial moment with a customer and they're just learning about you and they're excited to kind of get to know you a bit better, you shouldn't miss this critical moment of actually like providing all the initial information to enable this conversion. Similar with VC funds, you know, when we're asking for the data is not ready, then basically we're seeing the situation that it takes like up to like weeks or months until we receive the data, and then either we are moving forward already with some other cases, or it just becomes like not relevant and kind of like it diminishes trust in the founders to begin with. Because if you don't have your materials ready, essentially what it means for us that you don't use this data for your internal decision-making process. And if you don't use the data for decision-making process, it means that like a lot of your decisions are made just like out of pure guess. So for instance, if you're fundraising and you're asking for like €500,000, you know, we understand that you don't really have a strong idea in terms of like what you will be spending this money on, you know, like what will be, let's say, the cost on acquiring the customers, how long those customers will stay, and essentially like what will be the upside of all this. I sometimes get the question in terms of like what kind of data should be tracked. I would say that it really depends on the type of the case you're running, but also out of all the data that you are tracking, there is no need to show like every single thing to investors. Just identify the most relevant key growth drivers and the metrics that you are essentially like affect the outcome of your organization, and those are the metrics that you technically should communicate to investors. And I want to quickly cover 3 main categories in terms of like the main mistakes that we're seeing from the companies. First of all, as I mentioned, is not having all the materials ready and in order. And as I mentioned, like fundraising mode is just very stressful for everyone. And if for your side, it's about kind of reaching out to like hundreds of VC funds, from our side, the situation is kind of flipped. I would say like on a weekly basis, I usually go through around like 100 decks, and some of them are like diving a bit deeper, some are less. But essentially, if a VC fund kind of like having some interest in you, or you catch the attention of like any particular investor, definitely you should be very reactive and you should be very prepared. So have your deck ready, have all the Excel file ready, like different kind of charts or any other information that basically can support your case, and also help the investor who is actually like reviewing your case build up the conviction about you, about your team, and about the product that you're building, so that later they can communicate it to the rest of the investment team. And one small thing about us, but for instance, in terms of the Excel files, we are big fans of the raw data, because this way you can actually see what is the calculations and how, in general, how you're thinking about like the business model itself. And we can also kind of like avoid back and forth in terms of the questions if we will be able to see, you know, like all the formulas and all the calculations that you are doing. For the second point, data should be significant, accurate, and relevant. What do we mean by that? We oftentimes see a lot of insignificant, inaccurate, and out of context data. And for example, this often occurs like when the company tries to calculate their customer acquisition costs. They, for instance, could omit certain important costs that also contribute, you know, like to customer acquisition. Like, for instance, relying only on marketing, like while, for instance, they have like also like a heavily active sales team, and this should be included in the conversation, in the calculation. Or, for instance, in general, calculating it in the wrong way. Or, for instance, I've seen some cases when the company was kind of benchmarking themselves like against a different market where there's a different regulation or a different way of actually running like a very similar business. And this, for instance, just to give you an example, like we were looking in some kind of mental health solution in Sweden, but the thing is that like in Sweden, there is very established and developed way of subsidizing this kind of costs from the government. So in the end of the day, customer acquisition is way smaller than comparing to other countries, whereas this kind of government incentive is not actually present. Or, for instance, we are also seeing when the company is showing some kind of like snippets of data instead of showing the whole picture, like relying on the trial revenues or overall kind of adjusting the numbers to impress investors or trying to like wrap it up in a way that it looks better than it is. Good things that to remember that we will always find out like what kind of the real picture is. And if you will start wrapping it up, it will definitely harm the trust that exists between us and the company. So definitely, I recommend you to be honest and also keep in mind that we totally understand that in the early stages, you're not going to have like super impressive results. And remember what I said a bit earlier, is that when we are talking about very, very early case stages, we rely on the team. So you have to be respectful, honest, and more of a kind of like a clear thinker in terms of the next steps. And finally, the third point, that the data should be coherent throughout all the materials. Also, oftentimes we see the data that's kind of, not coherent, and we see the same metric could have like completely different values, let's say on the pitch deck and in other materials that you're offering. And we understand that also like there is a lot of materials to kind of like keep in mind, and all the data is kind of like changing every single day, especially like if you're using some kind of third-party metrics tracker. But just like keep in mind of this kind of issues that could arise, because once again, you don't want to have like any red flags that's not justified in a way. So if it's just like a pure mistake, or you're like, let's say you missed to notice like a certain thing, that would be really a painful outcome, like of your like fundraising process. And the problem is that like we, as much as we are willing to kind of like better understand your case and try to dig a little bit deeper, we cannot spend like all our time like on one specific case. So we're moving really, really fast, and less kind of small mistakes you could have like throughout the way, like better it is for you. So just to probably start wrapping things a little bit up, having an exciting story is very important, and exciting story could be used as a sort of a hook to kind of attract the attention of the investors and ensure that there is this initial interaction. But then next time you start thinking about, like how to actually communicate the scalability to startup, like keep in mind those points that I brought up in terms of like how we think in terms of the VC mass in a way, like, and also how good are you at understanding, like your customer acquisitions and so on and so forth. I know that all of you probably want to have this like nice hockey stick. And obviously, like if, for instance, you assume that there is like a 10% growth throughout the months, like months over months, this 10% could be correct if, for instance, you have some kind of like virality factor, but then you also need to bring all the virality metrics to it. But if you're not sure about this 10% growth, and you are in a more kind of traditional customer acquisition game, then you have to go with a bottom-up approach. So essentially, you need to have a very good understanding of how much money do you need, and how much of this money will actually go to the customer acquisition. How many customers will you get like with this initial spending, and what will be the end revenue this month, and how many of these customers will stay. So essentially, like you will be able to understand like how much money you're generating and how much can you reinvest to acquire the new customers. And this is, in a nutshell, what scalability is, or at least how we see it. And maybe the very last point that I want to bring up in here, essentially, valuation is a combination of two factors, opportunity and risk. So if you manage to help us remove some layer of risk by backing up assumptions with data, you're doing a good job for yourself, because you will be able to essentially increase the valuation, at least in our eyes. So keep this in mind, and next time, like try to really use whatever data that exists actually like to help build up the conversation and the whole narratives while talking to investors. Okay, so that's pretty much it. That's our team. And if you have any further questions, obviously we'll have a small discussion right now with Kevin. Please bring your question up. And there's also my QR code like for LinkedIn, like if you want to talk in private after. But otherwise, as I mentioned, our fund is Estonia fund investing in companies with consumer community components. So curious to learn more about you as well, like, and yeah, let's maybe kick it off as well, like with any kind of questions now.
Cool. Thank you, Iryna. Very cool stuff. Lawrence is asking if you'll be able to share the slides.
Yeah, totally.
Perfect.
I can.
Well, I'll drop them to the attendants. As for the question, we don't have that many questions, so I'm kind of expecting people to write more. Gunnar, I'm not sure what you mean by competition here, so happy to elaborate on that question. Anyway, the first question comes from a certain Jan Koch from Super Angel, I believe, who is asking what are the most important costs that you need to take into account when calculating your CAC?
That's a good question. I think for us, like I'm talking as well once again from customer acquisition on the consumer side, like, or at least like what we are mostly like dealing with. Definitely, we are looking at all the marketing spend. So we're looking pretty much at everything that you are pushing on the paid marketing. And then once again, it depends like whether using some kind of additional sales people, let's say, like to kind of make sure that the customer is being acquired. If that's the case, then you also have to bring the salaries of those people like as an add-on. So essentially, that's going to be your customer acquisition only like for the paid channels, but also you can adjust it in case you have some kind of organic growth, but probably I'm not going to go like in too much details right now in here.
So in broader terms, calculating the CAC is essentially aggregating all factors that are a cost to acquire a customer, whether it is marketing, whether it is your sales team, whether it is your any content you may be creating for PR or whatsoever. So these are all the items that we expect to be taken into account when calculating the price of acquiring a customer, right?
And I think also in here, it's important to remember that you should pretty much identify which marketing costs are relevant, you know, like specifically to marketing acquisition, and which costs are related to the overall like marketing of the company. And this is like also one of the things that we are seeing that the companies are kind of like mixing up every now and then.
Cool. Continuing on the CAC question, we have Yuka who is asking, how do you, when you are an early stage company operating, you know, just post MVP, very early stage, CAC and LTV are essentially guesses, they're assumptions. So how do you value assumptions in CAC and LTV on the first year of operation of your company? Like what really use cases can you make out of that, both from the investor perspective and from the operational calculation for, you know, running your company?
Yeah. I think, to be honest, probably that would be a question for you, Kevin, because you guys are investing more early stage. We usually invest at the seed stage, and unfortunately, there is no better answer from our side than just to wait and see like what's the actual results. Because even though obviously like we are taking into account some assumptions, we in some cases like we need to step back and just tell the founders that we really need to see, you know, like how kind of those metrics are actually developing. That's why there is a differentiation in terms of stages when kind of VC funds can invest. And there are like seed stage investors, there are like pre-seed and so on and so forth, and different investors have different expectations. In your case, if you're just like in the first years of operation, definitely, like as I mentioned, this is more of a kind of founder play game. And Kevin, you can correct me like if you have like a different opinion on this.
Yeah, I mean, I guess like very early stage assumptions on CAC and LTV is more about the actual go-to-market strategy and having a general plan on how the go-to-market goes to estimate the approximate cost of going to market, basically, right? Because there is plenty of examples in the jungle to give you an idea of what go-to-market strategy costs, so you can estimate whether it's going to be an expensive acquisition cost and whether the customer you're targeting have a tendency to have, you know, long-term retention, let's put it that way, right? Obviously, the quality of product will play a big role in the LTV. But you can run some certain estimation and also understand the founder's expertise and strategy in the going to market, basically. But as you said, I think only live numbers will be able to tell true metrics, and those numbers would anyway evolve over time. The more you get used to, the more you better your strategy, the cheaper it becomes, et cetera, et cetera.
And also, when it comes to assumptions, it's also like, once again, your ability to communicate exactly like on what are the assumptions that you are actually betting those metrics on. And I mean, I guess like if it makes sense and it's logical and realistic, then there's going to be like another conversation. But probably the first thing to think about is like the stage you're at and the stage of the fund as well.
That's very cool. I have a private message telling me that certain Yak has a system to measure performance of marketing on a 10 years of experience basis. So we might be able to connect anybody who want to learn more about estimating CAC to one of our contact community partners. That's how we like the community to be built up. Sorry. And anyways, moving on to the next questions. We have a question from Gunnar, who is asking us, can you explain how competition should be handled in the product market fit? Are there tricks available to get to give an overview?
To be honest, I don't really get the question. So I would say like how
should you position competition in the product market fit metrics, I believe. And how can you give a good overview where you stand in a competitive landscape? I guess that's where the question is.
Yeah, exactly. I mean, like that's pretty much what I showed you in terms of this 2x2 matrix. I think you can also like play quite a similar exercise and try to identify, you know, like how good the competition is addressing the actual pain of the market. And because in the end of the day, when we think in terms of the competition, like everybody is like obviously like within your competitive kind of field in a way, everybody is trying to solve the same problem, but from different perspectives, like with some kind of differentiation in the instance. But this differentiation essentially explains either how well the company is addressing the pain or how good their product is. Because think like, I don't know, like how many like nutritionists out there, or like how many companies that are trying to solve some kind of like automation services, you know, like for the businesses, and they do pretty much similar things, but there are like the small tweaks. So I would say that you can take a step back and just like try to better understand the product of the competition. And also if there is like any data available as well, like on their performance, you will be able to see as well, like how well they're addressing the pain. And essentially later you will be able to map those companies on this like 2x2 metrics, and also like identify where you're standing and figure out what you should focus more on, kind of like trying to figure out, you know, like who your main customer is and how to acquire it in the most efficient way, or whether you should actually improve the product itself and kind of like more to the like from left to right to this direction. I hope it answers the question.
You know, if it's not clear, just drop a message. We can clarify on that one. We have another question from Jan, very talkative guy. Any example of good hooks you've heard? Hooks as in narratives that have gotten your attention. So I believe it's about pitching hooks.
Yeah, I mean, pitching is a whole different story also. Like, are you pitching one-to-one? Are you pitching on the stage? You know, are you trying to reach out to investors on the first place? Let's say like by email or like LinkedIn and so on and so forth. One thing definitely that stands out to me is when the company really understands who they are reaching out to. So in the end of the day, as I mentioned, like we see like hundreds of emails and texts, and if you manage to kind of like bring up the clear message at the very beginning and say like, hey, like I saw that you invest in consumer, and like we've been building like consumer, or like for instance, like I saw that you were presenting in this conference, like doing this and this, then it kind of like ensured that the person actually did a bit of homework and like try to identify whether we are the right fit or not. One of the examples that we have is that, for instance, on our website, we have this kind of like a PDF file saying like, are we a match or not? And it's kind of like a test with maybe like 7 questions. And sometimes people, they actually like send me the answers that they got, you know, like, and say like, yeah, we actually did this homework and we see that we might be like actually a good match. And this already like sets the ground that, okay, like it will be like a positive conversation as well. And then that's a point when you can kickstart basically with a story. So I think those are kind of like a few examples, but yeah.
Yeah, if I can comment on that one, I mean, obviously, like you said, there's different formats. When it comes to pitching, I like to hear a certain storytelling that aggregates the right narrative that makes me actually attentive to what I'm listening to, because we listen to so many pitches every day that sometimes we just lose track of things. But if you manage to build a personalized story to why are you actually doing this, bringing in all the data factor that you mentioned, it makes a lot more sense and it's way easier to follow and understand. Now I see that Jan actually wants to clarify on the idea of cold emails, which is the hardest one to get, basically. You want to comment on that one, Iryna?
Yes. I mean, with cold emails, I think it's also me coming from sales background. Like, it's insane how even like small personalization like can, you know, make a big difference. First of all, I absolutely hate when there are like long emails explaining like everything about the company. And I prefer when there are like maybe like 4 sentences maximum and just like saying like, hey, we're building like this and this and that. I saw like, I double checked that, you know, you're investing exactly in the same field. I attach the pitch deck and I'd be curious to have a chat, you know, and this essentially, you know, like also it's a common ground that a common knowledge that you spend like up to maybe 3 seconds reading the email. You just like go through it diagonally, or you're trying to capture, like kind of catch the words that just stand out. So definitely like make it short, very coherent. I believe that cold emails work. In fact, one of the companies in our portfolio came completely out of blue, like through cold email, and currently like one of the most interesting cases probably that we have. So definitely, as long as you know for sure that it's the right fit in terms of the investment focus, and you make it like sharp and to the point, and kind of include all the necessary information needed to kind of have this initial interest, then definitely I think you should go with cold email.
And
But
speaking about the initial interest, what's your take on the presence of data in a 4-sentence email? In a sense that I've often been picked by emails where they say, all right, my name is whatever, we are, you know, 15K MRR, we launched 3 months ago. Where do you see the presence of data, and what kind of data in such a short email?
I think it depends as well, like, once again, what stage you are and who you are targeting. Definitely, you know, some kind of bullet points would be good, but also it could be that you like shooting yourself in the leg. But then if you have like bad metrics, you know, then it will pop up anyways, like sooner than later. I think at least for me, the initial interaction should be about kind of figuring out whether it's the right match in terms of the investment focus. And then basically, like if it's the right match, then I can ask to either share a bit more information on the current stage, on the metrics, or I will probably organize a call and then, you know, like ask for additional materials afterwards. So at least that's the way how I prefer working and how I prefer getting approached.
All right, okay, we have another question from Jan, but I need some more clarification. Just continuing on that conversation in the meantime, for me, I really like when companies are hyping me up with certain metrics. Obviously, it shouldn't be lies, but when you have an idea of what the company makes and what's the basic traction, and it doesn't even have to be numbers, it can be, hey, we won the DTU FinTech Factor in Riga, whatever. We are obviously a fintech company and would love to meet with you. Building that little hype is what will likely give me the motivation to organize a follow-on meeting, right? Going on the question of follow-on meeting, the usual format, I believe, is the same as Trind Ventures. First meeting with a company, half an hour, right? What do you expect from that company in 30 minutes? And what do you think should be the objective of the company in those 30 minutes?
Yeah, that's a good question. So for me, usually I ask 3 questions. So the first one, I ask the company to kind of talk me through what they're actually trying to build. And usually it's either in this kind of free format when the company is just describing what they're building, like, and all the, points related to the team, like market, competition, and so forth. Or they can use actually the pitch deck as a backbone and kind of like walk me through the pitch deck. Then the second question that I'm asking is always about the traction and what kind of the stage the company is. And this helps me kind of like better understand whether it's the right fit time-wise in a way, and or whether there are any kind of like early signals that might be interesting for us. And finally, I'm also asking about the fundraising situation. So whether the company is already fundraising, planning to fundraise, and whether it's a first round, like they've run any investments before, just for me to kind of better understand if, for instance, the company already started to fundraise, like what are the commitments, like where they are in the whole process, if they are planning to fundraise, and also is a question of urgency, kind of figuring out like whether, for instance, this additional time could buy us a couple of more months to kind of better understand like how the results will be then. Or for instance, if they are just like having the second round, then also it's a question of like all the cap table and so on and so forth. So I usually start with those 3 questions, and then I'm asking the company to share the materials, like as I spoke in the presentation, everything related to like financials, like actuals, the forecasts, metrics, and so on and so forth. And then basically like starting from there. So initial meeting is more about like understanding where the company can communicate what they're building, like their situation, also understanding their stage and understanding what's kind of like the investment process they're in.
All right, cool. I'll add one more thing on my end. When I meet a company, I like to try to obviously what you said is very relevant to what I also asked, but I think trying to understand whether the company is in a certain momentum, whether they're about to reach a certain milestone that will trigger a need of acting fast and implicitly a form of FOMO in the investor mind. So I often tell that to companies to try to consistently build a momentum and a story that will trigger an edge compared to the thousands of other companies that we're meeting on a pretty much daily basis, right? Now, coming back on the data, churn, CAC, et cetera, very interesting question is, where do you see and how do you assess the standards in terms of the metrics we described? So Jan asked that you gave example of metrics. How do you assess the range which make it a decent standard? I also had that question in my notes, like, what are your standards around LTV, for instance? What your standards around churn? And knowing that there is so many different segments, how do you assess when you don't know those segments?
So did I understand correctly? So the question is about the benchmarks.
Yeah, exactly. Sorry, good wording. Benchmark on LTV, CAC, churn, and any kind of metrics.
Yeah. Well, the honest answer would be is that I'm still kind of learning every day, and trying to kind of better understand for myself as well what the right benchmarks are, especially given that with different kind of like cases, like they just require to have like different benchmarks, even in the consumer space, like whether it's like consumer apps or consumer like products, it could be completely different benchmark there. On the consumer side, definitely I can share like one really good article. So in terms of benchmarks, when it comes to churn, I think like one good thing to think about churn is to think about it like in terms of annual kind of like time period. And you can see like basically by the end of the month, if like you have, let's say like 6% churn every single month, like how many customers do you actually have retaining like at the end of the year. And this will give you like a good estimate, like whether whatever you are spending like in terms of customer acquisition actually like makes sense. Also, there are like a bunch of benchmarks available online as well, like on different sources. So depending on what kind of product you're building, you can definitely do your research. And a good idea as well, like to talk with investors, because for instance, if you're building a B2B SaaS product, definitely you can, like ask and see like what is the expectations of that specific fund. Once again, I will repeat myself that like even within different funds, expectations are different. So if you also like identified, like a few investors that might be like the most like dream VC funds to join you around, then, like it's a good way to actually like communicate with them early on, like what are their expectations in terms of the performance.
Cool. Well, I'm guessing anyways, for any VCs, what we're looking at is maximizing shareholders' value, right? So aiming at stellar growth. And for that, any company and any founder should constantly be challenging its own CAC with the objective of optimizing cost to maximize return, right? Today, I saw a very nice photo on Instagram of a consultant going back from work in a Lamborghini after telling his clients that you should increase revenue and decrease costs. I guess that's what any investor will tell you on the long run anyways. How to do it, that's another story. I have another question with regards to data. On a due diligence perspective, so you met the company, you had a half-hour call with them, you really like what they do. From the due diligence perspective, how do you like to see the data being collected? In my experience, I've seen people showing screenshots of their back office, non-aggregated randomized data. How do you see the right place for data to be stored and presented?
Yeah, that's a good one for sure. I guess if you go like in this deep due diligence, like when we have serious intentions to actually invest in a company, if you are collecting metrics and data somewhere like on, let's say, like Mixpanel or like any other service and so on and so forth, we usually ask to kind of share the access. So you can see, and just like play with data a little bit and see like what's kind of like the different outcomes in different like time periods. When it comes to, let's say, also like Excel files and so on and so forth, I mentioned that basically for us, a very big frustration when the data is hard-coded. When, for instance, like you're looking at the projections, but instead of like having a logical formula that takes into account like all your assumption, there are just like the numbers and you don't understand where those numbers actually came from. And that's pretty much also applicable to also like metrics calculations. So in the end of the day, I think everything related to screenshots definitely like, well, it's okay, but it's not optimal. And especially like if the fund will want to invest, you will probably need to provide, like some kind of raw data that we can play with as well, just to identify, like whether whatever you're presenting actually makes sense. One fun example that I have as well, like about kind of, shaping the data in a way that it looks attractive for investors, but actually being like super irrelevant is like I was talking with one company and they were saying like, oh yeah, our conversion to paid is actually 40%. Really good, but then actually once we started digging deeper, we realized that they only had like 4 paying customers out of 10, and that was like super early stage as well. And those like 4 customers, it was also consumer products, those most probably were like just family friends in a way. So this like 40%, it looks like a very nice big number, but it creates this distortion for the investors. And you should rather say like, okay, like we have like very small sales right now and there are like 4 people paying, instead of just trying to paint a better picture and kind of like show the outcomes this way. And I think screenshots, they are doing the same kind of job. They are creating maybe a better picture, but like it doesn't show like the whole situation, which is always a bit disturbing in a way.
Okay, we have another question from Jan, going towards what I was going to actually comment and ask you, Iryna, right before we get into Jan's question. Do you feel that integrating those data points into the general company's Excel powerhouse? So what I like to see we call it a business model where you have the profit and loss, you have the forecast, and you have any kind of data aggregated into a single Excel setup. I like to see the churn, the CAC, and any other kind of metrics integrating to this format, so you can actually understand where are the relations between the different items, right? Is it something that you commonly see, or what's your view on that one?
Yeah, I mean, we see it quite often. So either it's integrated in the same file, or there could be, let's say, the financial model where there are also like actuals and the projections, and then there is like a separate file just with the metrics. So in the end of the day, it doesn't really matter whether it's like in the same file specifically, as long as this information is available like upon request.
Okay, cool. Yeah. So Jan's question regarding the financial model, like if you've never done it, you don't know how it works, you don't even know how it looks like, what's your top one recommendation? Early stage founder needs to put together basic financials to showcase upcoming investors. What's your recommendation here?
Yeah, I think first of all, also there are like quite a lot of examples available online. You can always also like seek for help like from third parties. Like there are, I don't know, like consultants who are doing this, or like if you're part of the acceleration program or whatever, like they can also like help you kind of build up those bits and pieces. But essentially, you just have to think from bottom up and try to think in terms of like in terms of your costs, like how much money do you need to actually like run the business and so on and so forth, and also like how much potentially it can bring you in terms of the revenues, like once you start like monetizing the actual product or service that you're building. And also you need to identify the key growth drivers for your organization. So like what are the critical components that you should focus on to actually like not reduce the cost, but like could reduce the cost, but also like what actually affects your performance in the long run.
You actually gave me a book a few months ago, called The Founder's Guide to Financial Modeling, Dave Lishigo. I went through that, very good content and very easy explanation on how to build your financials and what are the key points. I'm dropping the name here on the chat. Very happy if anybody drops me an email with a request and I can share that PDF. I'm not even sure that's even legal, but anyways, here is the information on the book. You got it right there. Continuing on about the financials and the overall concept of forecast. As investors, we see a lot of startups obviously sharing unrealistic forecasts, and some being very conservative with their forecasts. Forecasts are forecasts. You never know what's really going to happen. There is basis for assumptions. When you're super early, always hard to gauge, right? What's your take, and what do you take out from looking through somebody's forecast?
Yeah, I mean, exactly what you said, like forecast of forecasts. As long as it makes sense, then it's clear. And that's pretty much the question for the whole presentations that I had today, because forecast can also draw this like nice hockey stick graph in a way. But if your numbers in terms of like customer acquisition, in terms of retention, they're just like taken out of plain air, then it doesn't really make sense like your forecast, because like essentially like whatever you are forecasting in terms of growth doesn't really make sense. It's not realistic. So I think a good way to think about it is to think once again from the prism of metrics, to kind of better understand like what can you tweak. Let's say, how can you like reduce your marketing, or how can you like increase the pricing, or how can you improve the product so that people are actually sticking around. And essentially after that, it's obviously a good way to kind of like play these three scenarios. I think it's quite a common practice to have this kind of worst case scenario, optimal, and the best case scenario. And then this way, we can also like understand what's kind of like your range of thought in a way. But definitely, if you are like over optimistic, we will let you know. If you are not so optimistic, but you are over delivering, then it's definitely also like a good sign. So there is no kind of like silver bullet for all of this, but yeah, definitely like try to use the assumption on the basis of the metrics that you're tracking.
Cool. I was going to back you up on that one, saying that, beyond the theoretical analysis of forecast, there is the abstract need for investors to see how you think, to see whether you are over optimistic and trying to oversell your company to an investor, or do you have valid reasoning behind describing your forecast. I think that shows a lot onto the founder's psychology and the founder's way of working. So these things have to be balanced. We're running out of question, and I don't think we're running out of time. So Jan usually loves to ask questions. If you have anything more, Jan, drop it in. Anybody else? I'm sure you have some more questions. I think it's your opportunity to do so. I need to check the Q&A question. Sorry, I have more questions. Wait a second. What happens on the background in the VC fund after founders have shared all the data? Do you use any specific tools to validate data and or aid in decision making? Very good question. I love that one. You want to take it, Iryna?
Yeah, I really like it actually. We personally don't really use any external tools. I know also like there is obviously with all the like AI boom and so on and so forth, like there are quite a few funds that are using this AI tools to even like go through the pitch decks to kind of identify what's kind of the right fit for them, which is interesting. Like in our case, we strongly believe that we are faster at identifying whether it's the right fit for us or not, rather than just like relying on AI. When it comes to the financials, yeah, I think it's just like literally going through the whole document, like line by line, trying to identify the patterns and like seeing whether the actual data makes sense, whether there are like any questionable numbers. Like for instance, you have some kind of like other cost, which is like 90% of your revenues or whatever, then obviously like we don't really know what this like other cost is. Or for instance, like you have like a spike at some point, like in terms of your like revenues or like any kind of expenses, and definitely we also like want to know. So in a way, we take your raw data and trying to kind of build up the picture and also put it against the stories that you told us, like the story in terms of the pitch deck, what was written there, what you shared with us, was kind of like our understanding of the market. And then in the end of the day, at least like in our case, we always kind of like follow up with questions and just like asking a bit more to clarify certain things. And then if that's kind of like ticks off the boxes, and basically like we continue with other steps of the investment process.
Cool. I have some comment on that one. Actually, it's pretty cool stuff. Just to extend on the question itself, most of the time, a VC fund on its own cannot make an entire due diligence on its own. I'm facing a lot more AI-related stuff, and AI and any tech aspects that require to some extent a tech due diligence. So oftentimes the material that you share while remaining confidential as much as possible is usually discussed with third parties who do have a tech expertise. I come from a background where, or at least that's how I learned how to do the VC stuff, especially when I was working for Paris, where the guy I was working for knew nothing. That's what he said. So we constantly relied on friends of him, network of himself, to review and understand whatever cases comes to the table, because you need to have expertise insights when it comes to whatever you guys are doing, right? So as much as we can, we try to involve third-party experts to review what you're doing, both from the tech perspective, but also from the market and operational aspect of the deal, right? As for third-party tool, we are actually using Circular.io, Swedish company, to aggregate all our notes and all the information that we collect about a company to pull together a cleaned up investment memorandum. So that leads to the question of how should you build your deck so it's machine readable for potential AI users who would be using your deck as an input of data to put together an investment memorandum. A very interesting conversation. The name of the company is Circular.io. I recommend you to check it out for your own sake. I can get discounts for investors. And if you are a startup, look at how it works, because more and more VCs are processing your data, especially your pitch deck, through that kind of tool in order to extract information. valuable insights, Iryna. Curious to know from a monitoring, scaling, and extrapolating metrics for scale-ups, are there specific numbers you're most interested to see in progress memo from founders? So essentially, when it comes to investment updates from your founders, from your portfolio companies, what are the data you want to see?
Question, are we talking about portfolio companies, or we're talking for the companies that we're following up with?
I mean, I'm not sure you can see the question. Curious to know from monitoring, scaling. So I believe it's portfolio management. What are the numbers that you're looking into? Progress memo as in investor updates. Correct me if I'm wrong, Mitch.
Yeah, I mean, the way how I understand the question is a bit different. Like, I understand it more like, for instance, if we said that this is not the right timing right now, and let's say like we are going for the next round, or, you know, like once we are combining the conversation. Yeah, on our end, I'm kind of like, I'm not a big fan of this like monthly updates from companies in this case, because then it feels like we are looking too close at the company and we are just missing basically like the actual kind of progress that the company is developing. So I would rather have the company getting back to me like, I don't know, like every 3 to 6 months, you know, like with some kind of updates. In terms of what exactly we are willing to see is more about what kind of metrics you are targeting. So this could be definitely like the growth. In our case, for instance, I would say like 20% monthly growth is quite good. And then, for instance, if we're talking about like 100% like year over year, it's already like a very good signal. Then definitely like all the metrics, like pretty much everything that I covered today. But obviously, you know, it has to be at least like one thing that's exciting so that it can kind of like kickstart the conversation again. But if we are talking about portfolio, yeah, I see that you clarified that it's portfolio. Then it just depends on kind of like what the company is measuring, and different funds have different strategies. In our case, we always say that it's a company who's kind of like at the driver's seat, and we are just in the passenger seat. So we are just following what they are tracking internally. But as we are kind of picking up the companies that are already data-driven, they all have their own individual metrics and things that they are targeting. But overall, a rule of thumb that obviously like we are looking at the financials, we are looking at the developments, like if they were like trying to like test certain hypotheses, like we want to see like whether they actually did it, like what's kind of the outcome and so on and so forth. Definitely with portfolio, we are looking at burn because we want to see as well like what's going to be like the fundraising situation and what's the kind of like the cash balance. And yeah, and in case the company is fundraising, also like all the information and on the fundraising process, like whether we could be helpful as well in any way to help our portfolio companies with any kind of interest, or like trying to kind of like drill down their decks and so forth. I hope that answers the question as well.
I think it does. I mean, like for us, from our portfolio perspective, from day one, we are actually teaching our companies how to put together an investor newsletter to keep these investors informed. And we ask companies to share it, cohort companies, to share it with one another, to kind of like get the best way to build those things up and try to better identify what are the right KPIs you want to showcase to your existing cap table investors. Now, coming to investors who tell you, hey, you're too early, come back in 1 year, or investors who tell you no, you know, you could always send them that newsletter. But what I like to say and what I like to see is when people are sneaky about it. They make sure that they're building a momentum on social media by showcasing where they stand to a wider audience, picking up investors they have been speaking with to create that constant momentum. And that's one more thing that we're trying to build with Tenity from day one, is teaching our founders to be leaders of their community on social media to create that buzz and that momentum that will create updates naturally, essentially, right? From the investor newsletter perspective, I think it's about the identification of the right KPI, but also the right ask. What do you want from the reader? If you're an investor, maybe you want to chip in our bridge round. If you are a investor. Maybe you want to help me out figuring out my financial modeling because I have a hard time. It's my first company. Always try to figure out the right ask through your newsletter to keep it engaging, but also to keep the investor updated to where you stand. Exactly like you said, from a burn rate perspective, a runway perspective, a number of user perspective, a revenue perspective, et cetera, et cetera.
Yeah. I also wanted to kind of get back to the question of metrics because people were asking in the chat as well. I shared the, I don't know if you can see my screen, but I shared 2 resources that I personally find very useful. So if you're building something more on the consumer side, definitely this Leni Rachitsky newsletter is like gold. It's something that we rely on as well, like internally. But basically it kind of gives a really good understanding of what different like consumer metrics are, you know, depending on what you're kind of building. And it speaks a lot about like retention. Then, you know, like there is an explanation of as well, like what's kind of like good or bad, great, yada, yada, yada. And then basically like net revenue retention as well. And in here, you can also like access like all the sources and so on and so forth. But if you're, for instance, on more on the B2B SaaS side, really cool thing that A6NZ they came up with. It's basically like a guide to growth metrics. We assume that with time, basically it will expand to other categories, but essentially you can click that, okay, like you're an enterprise company, then you are building, let's say, like top-down like sales motion, building like an application software, and you are like out under 20 million ARR. And then essentially what it does is just calculates like all the metrics that they think should be like done at the stage. So basically it gives you like all the percentiles, retention, then net and dollar retention, like margins, and so on and so forth. So basically you can play around if it's relevant for you, and also like keep an eye, because I think there will be also kind of adding additional tools as well like this time.
Oh, that's nice. I hope everybody's saved. I'll save anyway those links and share them afterwards as well. All right, we have time for one more question. If nobody drops that question, I would ask it myself. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Can you give an example of a successful investment that was significantly influenced by your data-driven approach?
Are we talking about ours?
I think it's about your portfolio. When did you make, or it doesn't have to be an actual investment, but when and how was a data-driven decision made based on the quality of the data supplied by whoever talked to you, whether it's a portfolio company, whether it's a company you're investing in? You got the point.
Yeah, first of all, it's the nature of our investment thesis. So basically, we say that we invest in consumer tech marketplaces and B2B companies with short sales cycles. What we mean by that we prefer when there are lots of small transactions and small kind of data points that we can use to identify the trends and essentially figure out like whether the company is on the right track or not. When it comes to us kind of figuring out whether it's an interesting investment from data point or not, first of all, is when the company is presenting their materials and how they actually like answering our questions and presenting the case. So for instance, one of the final stages of our investment process is so-called group call. So we're inviting the founding team, and we are talking with the rest of our investment team. And it's kind of like a call where the company can walk us through the case once again, and then we can also like ask any kind of questions. And you can clearly see when you're asking about like certain things in their like financial model, whether they're just answering for answering, or they have like a really good understanding of like all the processes and how one thing actually affects the other, which leads to, let's say, revenues and like what kind of cost it implies and so on and so forth. Yeah, and I mean, like the biggest indicator is definitely how much the team is using it internally for their own understanding. I guess one of the companies that we are having in our portfolio, they are the service marketplace. what's really impressive that they are basically reporting their data on weekly basis. We don't request it ourselves. I think, we should, like, investors should never ask something to be done like additionally. Definitely there is a right to information, but like usually like monthly basis is quite fine. But the company itself is following all the metrics and data on weekly basis and shares it with us. And this essentially gives us trust that the team actually understands all the processes inside out, and they can also actually spot early issues and challenges with the help of this data. And as we're around, basically, like we can see like how the things are developing, like on the more granular scale. So overall, if we're going back to the question, so it was about successful investment. I think this part I would like to kind of maybe respond to in 6-8 years time. Then for sure we will know whether like our data-driven approach was right or not. But at least this is our kind of highest priority and value by which we live. And we strongly believe that not only it helps us identify best cases, but also helps the founders actually run the business.
Cool, thank you. I think we'll wrap it up here. Quick end notes. Quick reminder, if you're not part of Tenity's community, we are a VC accelerator corporate partner specialized in fintech. We're actively looking for putting together our next batch of investments. So if you want to meet with us, present your fintech, insurtech company, please write to Lisa or myself. We'll be very happy to learn more about what you do. That's the first thing. The second thing is, on the 5th of November, we are organizing the FinTech Factor at the FinTech Forum in Riga together with the Central Bank of Latvia. So it's a great startup event focused on FinTech and that kind of stuff. Hit us up if you want to know more. We will be showcasing a bunch of FinTech companies on stage, not only ours, but also more of them. And lastly, I enjoyed that webinar a lot. So if you guys liked it and you would like to have more opportunities in kind of having a live podcast, Q&A kind of situation with investors, I'm very happy to run more of those. So if you put a thumbs up or a plus or whatever on the chat to gauge a little bit whether this is something we should be planning in the future, please do it. And once more, Iryna, thank you. I don't know if you want to drop your email address and get bombarded by potential new cases to review.
Yeah, definitely. I will share my LinkedIn once again because my mailbox is a bit overwhelmed right now. But definitely happy to hear more about what you guys are building. And yeah, if you have any questions, let me know. And otherwise, I really hope that was useful and maybe inspired you to be a bit more data-driven and excited. Yeah.
Well, Iryna, I hope to see you very soon. Take care. Have a beautiful day. And everybody else, back to work, maximizing the shareholders' value on a data-driven approach, I guess. Cool.
Thank you so much. Have a good day.
Bye-bye.